Russia's President Putin has announced a military operation in Ukraine, and markets are not happy. Welcome to the Daily Forkast, February 24th, 2022. I'm Angie Lau, Editor-in-Chief of Forecast, covering all things blockchain. Well, Ukraine's foreign minister has said the country will defend itself and has asked the world to help after President Putin's announcement of a military operation in Ukraine's Donbas region. We're going to take a look at the crypto market's reaction and a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Kicking off with a look at the crypto market, it is a sea of red in the crypto top 10 following President Putin's surprise television address announcing a military operation starting in Ukraine. Forecast's Carolyn Wright reports.
Crypto markets have had a tough couple of months, with investors cautious over rising tensions between Russia and Ukraine. And now a military operation in Ukraine has been launched by Russia's President Putin. The White House has reacted by announcing a meeting of G7 leaders to discuss further consequences to be imposed on Russia as a result. Bitcoin reacted by sliding just over 9% to trade at $34,461 by Thursday lunchtime in Asia, and it took most other major cryptocurrencies down a similar amount. However, one exception is Terra's Luna, which had fallen just 2% by the same time in comparison. That could be down to the Luna Foundation Guard raising $1 billion for a forex reserve denominated in Bitcoin for UST, Terra's biggest stablecoin, via an over-the-counter sale of Luna tokens. Overall, the Bitcoin Fear and Greed Index that indicates how worried investors are using data including volatility and trading volume remains at extreme fear. One expert told Forecast that while a knee-jerk reaction was to be expected in such a cautious environment, it's not all gloom and doom.
The initial reaction of a lot of people will be, I don't know, and therefore I'm going to take risk off the table. And then I think probably a number of other people will probably come in and say, well, I don't think it's going to be too bad. And we could well see some bargain hunting by the end of the day.
For Forecast, I'm Carolyn Wright.
Let's take a look at what else is happening around the Asia-Pacific region today. First up, Japan's largest bank says it is giving up on its blockchain payment venture. Yep, Mitsubishi UFJ Financial Group is preparing to halt and liquidate Global Open Network Japan, which it set up back in 2019. Now, the financial conglomerate says the closure is due to the harsh business environment caused by the pandemic and that commercialization of the venture was actually taking longer than it expected. Now, earlier this month, MUFG announced plans to issue a stablecoin pegged to the Japanese yen next year. That apparently is still in the works. Meanwhile, mixed messages from Hangzhou in China over crypto mining. Has there been a change of heart over the mining ban? Well, confusion arose after the government in the eastern Chinese province of Zhejiang announced an increase in electricity prices specifically for crypto miners. I thought they banned it. So it actually raised the question over whether the ban had been lifted there. However, it has now been clarified that the increase was intended as a penalty measure to support the ban, rather than indicating that mining is allowed again. China did ban crypto mining last September, sparking a mass exodus of miners from the country. However, state-backed media said recently, in December, that small-scale operations still exist in secret. You can find those stories and more at forecast.news. Well, there is a definite chill in the crypto air. Coins like Solana and Polkadot have lost half their value in the last 2 months, as the markets at times have appeared to be in a free fall. What does this mean for investors, and is there a play to be made here? Justin Danathan, Institutional Sales Director at the Amber Group, joins us to chat about the outlook for the new economy. It's great to have you with us, Justin.
Thanks for having me, Angie.
All right, okay, let's talk about Vitalik Buterin, co-founder. We all know this guy, legend, right? Co-founder of the Ethereum blockchain. He recently said that people who are deep in crypto are actually welcoming a winter or cooling prices as it can help weed out unsustainable projects. What do you think?
I couldn't agree more. And I think when things have gone up for a long time, it's healthy for prices in any given market, but definitely in crypto markets, to cool down, right? It flushes out some of the traders that might have been over leveraged. It gives an opportunity for new entrants to allocate capital. But the second part, and I think the thought that Vitalik Buterin had in mind when he said this, is that during a bull run and periods of enthusiasm, there's a lot of projects that will launch. And within those projects, probably a chunk that aren't adding that much value to the space, or maybe don't have the tech foundations to survive long term, or even a competitive edge that means they're worth allocating capital to. And so in crypto winters, or when prices go down, it forces investors to reassess their risk profile and essentially the quality of the investments they're holding.
Yeah, no, I absolutely agree. It is good for the industry. I always say it's about credibility and quality. But, a lot of people are seeing this price trend right now, the last 8 odd weeks, as a mirror of the trend that we're seeing in the broader equity markets, geopolitical tensions. Is it a fundamental shift? What are we seeing as crypto assets go down? Is it a mirror of all of these three things?
So my assessment is that the fundamental strengths of the crypto space haven't waned in any way. They're still as strong as they were before, definitely as strong as they were just a few months back. On a longer term basis, Bitcoin and crypto assets tend to be very uncorrelated assets, so they don't move at the same pace as other assets, but on a short-term basis, they're considered as risk assets. And so when there is uncertainty in markets, whether that's due to geopolitical tension, which you mentioned, so Russia, Ukraine right now, or the Fed raising rate, essentially tightening their balance sheet, it forces investors to think, well, maybe we don't have as much abundant cash as we used to, and it's a time to go back to cash, so sell some of the stocks, the real estate, the crypto or other assets, go back to cash and wait for things to clarify. And I think that's what will happen relatively soon. At least we will get some kind of clarity on the geopolitical tensions and also on the objectives from the Fed. And as soon as there's more clarity, regardless of whether it's positive or negative, I think you will see investors more willing to take new bets across various assets, and that includes crypto.
Well, certainly at these prices, it's a lot more affordable to get in. Lastly, institutional presence in digital assets is getting even stronger. You could say they're seeing an entry point. But reports say that BlackRock plans to offer crypto trading services as well. Your take on old school firms making their presence felt in the new economy?
We're naturally very excited about that, right? First, because of the capital they deploy in the space, obviously, but also what it means for the asset class in terms of legitimacy and the path that it opens for a wide range of new investors that might now look at the value of crypto or how they can get involved and so on. Now you're seeing maybe bigger names jumping on the bandwagon. I think they're slowly realizing that Bitcoin and crypto assets in general are a thing, that decentralized finance is gaining adoption, is gaining traction, and that they need to get involved in order to stay relevant. But I do think we've hit a point of no return, which is great. And then maybe on another point, another thing worth noting, and that's very supportive for the space, is a lot of companies that do want to get involved in the crypto space do that by investing in crypto companies, so the projects themselves, as opposed to necessarily trading the coin. And there's a lot of capital that has been coming in the past 3-6 months. And ultimately that translates into prices because all those projects are very well funded and can grow sustainably.
We are experiencing that. We're seeing that ourselves in the VC space and beyond. But you are seeing this mix of the old economy mixing into the new economy. Justin, thanks for the insightful conversation. Really appreciate it. And that's the Daily Forecast from us right here in Asia to all of you around the world. So you know what I'm going to say next. Hit like, hit subscribe, hit that alert button. We appreciate it, and it helps us reach more of you. Visit forecast.news for more. I'm Editor-in-Chief Angie Lau. Until the next time.